Welcome to the London Outlook for Friday, the 22nd of December 2023. I'm a little late with today's Outlook, but yeah, I think there was there was actually an opportunity to get in during Frankfurt, and I'll show you that now. But what I first want to do is just touch on the news releases. As you can see, we had retail sales, red folder news for GBP, releasing at Frankfurt Open. The significance of this news release, while red folder doesn't negate us from actually entering any trades, which is fine. So we could be actually triggered by the news release into an entry, or not. In terms of the news release, it was positive, and thus we can anticipate trading long GBP USD. This is good because it actually aligns with our narrative from the past couple of days. And then in terms of the New York session, we do have some red folder news, but similar to GBP, it's not news that we can't have trades open for or allow the news release to trigger any entries. And thus, once this is released, then I will manage my open London positions accordingly. In terms of the charts, nothing much has changed in terms of market structure. We're still in a confirmed bullish trend. We do still have this pro-trend primary leg on the 4-hour that was validated when we actually broke the substructure level with a body break. There is that CPB level right there, and then from then on we wicked the low, and you'll see on the 5-minute we then said, okay, we've essentially reset the primary leg, and we've developed a new 15-minute, 5-minute, or even 30-minute for that matter, primary leg that we can now work off to actually find trades for today. Moving on to the 15-minute, this is what I was just explaining, the new primary leg, which I guess now sits somewhere here. But maybe before I move this, just to explain what my thought process was this morning, is the fact that we actually have the previous day high or low of the day right here, with previous high being there, previous low being here, and coming into this morning, this was today's high of the day at the time. So because of the fact that we don't actually have a validated low of the day, in the sense of we haven't in the current day extended the primary leg, thus making it not worth actually using the current low of the day as a fib anchor point, which means your next best option for anchoring your fib is actually using the previous low of the day, and in which case you can see the next valid fib to trade from is probably somewhere around here. But the issue with this is that we actually don't have any fib alignment in this regard, and price would have to actually come quite far down to potentially get an entry, with our next bet probably being this OBO on the 4-hour, using this as liquidity in the leg, or alternatively finding a 5-minute unmitigated level. So as you can see on the 5-minute, we do have this unmitigated level, which actually does align to that, and then we can say, okay, that makes sense from a primary leg perspective. There is only one direction to trade from, so having a stop loss at this 11% level is probably good enough. However, the news release came up, went further upwards, came out and supported further longs, and then from that point onwards we essentially I guess we essentially had reason to trade long, just because of the fact that the primary leg was actually extended, which then gave us reason to not to validate but to support to support our fib being anchored to the current low of the day. We also had the Asia range being liquidated, and then the next set of considerations was, okay, do we have liquidity in the leg? Do we have a POI? And is there fib levels aligned to it? So usually in the London session, we at least want to trade from the 38% level. the one thing that I do have to note is the fact that we actually we don't have liquidity in this leg for this entry. However, liquidity in the leg is a consideration for stop loss placement more so than entry placement. So as long as you got a valid POI and you actually have fib alignment, then it's perfectly fine. You can enter like that. And the reason why I gave a lot of, well, how many pips is this? I gave a lot of space to the stop loss is just for the fact that if we do sweep this liquidity in the leg, perhaps we might sweep the low of the day, and if that is the case, then I don't really want to be taken out of the trade. So that's the reason for the stop loss. Your other option is to maybe use a smaller entry point somewhere here and go with a slightly better coverage of your stop loss. But it's about balancing getting into the trade versus potentially missing the trade, and then yeah you know either way, whatever happens in this scenario, if we're going to take a loss, we're likely going to take a loss for both trades. So it comes down to judgment. You have to be comfortable with that fact that either you're gonna miss a trade if you look for a smaller stop loss or a lower placement. But yeah, I think the most important thing is the fact that it actually aligns to your trading plan, and in my case it does. We have a POI, and also the reason why I got my POI like this is because it's a bit of a range, and then using this specific level isn't very smart because they're all related, right? So this is something I wanted to highlight. If we are right about the direction of the date, then it's more likely than not that this will actually be the low of the day. We do have support from the news, so it certainly makes sense to actually make sure that you are in this trade. And then in terms of target, ADR for, well, daily range for December is about 100 pips. My target is this substructure high for today. However, I'll see how price is reacting as we get to here, and then I'll also consider what the news release is. If the US news release is actually negative, then we got further support for longs, and while the ADR is 100, maybe it's actually worth even targeting this ERL. However, on the same note, perhaps it's not worth being greedy, being it quite late in December and it's a Friday. So yeah, I think that's fine. If you are in this trade, in terms of break-even management, I'm waiting for price to get here before I break even, and then we essentially take it from there. We can consider additional entries if they line up with fibs and don't I guess they don't really impact this trade. So what I mean by that is, if a continuation does set up, it shouldn't be that this trade has to be a break even for that new trade to be entered into. At that point, you're pretty much eliminating the whole idea of a break even protocol, because if you're taking secondary entries while your first is break even, then what's the point of the break even? Why don't you just keep this open? So that's also something to think about. Overall, that's the end of the outlook for today, and we'll catch up in the New York outlook.